Welcome everyone to HFN, also known as HueFin News. Today is May the 9th, 2020. Now we're going to update you all on these three stock indexes, the NASDAQ, the S&P 500, and the Dow, and to tell you why this market is still a buy. You know, you have many pundits, many experts, so-called experts out there in the financial sphere telling us that we should not see a V-shaped recovery, that the market should not be moving higher, that we are entering one of the worst recessions, worst depressions. The COVID-19 pandemic is going to cause massive layoffs. The unemployment rate is hitting double digits right now, but yet and still the market continues to see higher price. You see, that's why the focus for financial literacy needs to be on price charts, and only the price bars and the volume is what you need to utilize and comprehend and understanding where the market is going to go. And that's what we're going to provide you here on this channel. So make sure you hit that like button, share the video, join us on other social media platforms, i.e. Twitter, Facebook, Instagram. We got our own website as well to make sure that we stay ahead of the game. Our website is HueFinancial.com. Make sure you join the community there to make sure you stay updated on many of the price movements and expectations that we're seeing in the financial world. All right, so we're going to update you all on the stock market, right? These three indexes, like I just mentioned, NASDAQ, S&P 500, and the Dow. The last time we did our video for those three indexes was on April the 12th. And you guys can already tell expectations was for the market to see higher price. And it played out precisely the way that we did. Now, it's going to be a very quick video because we're just going to look at this on a long-term time frame to substantiate why the market, or at least these three indexes, is going to continue to see a move higher in price. But first, let's take a look at the performance of our prior forecast into the market for the NASDAQ, the S&P 500, and the Dow. So like I said here, April the 9th is where we went ahead and did our forecast. Let's take it to the 12th. We did it on a weekly time frame on our video. So here we are. It's where we did our video. And then we're expecting the market to move higher in price. And clearly over the last 4 weeks, we saw that. Okay. So either you could have tapped out at 4.5%, or if you're still into the market today and you were to tap out now, 12.11% right there. All right. So let's go ahead and grab that out the space and let's get rid of it. And real quick, this is the reason why the NASDAQ is probably one of the strongest out the three. I will tell you that the NASDAQ is the strongest out the three indexes. We closed on this last weekly price bar at the high, and it's almost to the point to where the NASDAQ is going to try to make all-time highs. You know, I'm one of the first ones to tell you that CNBC, Yahoo Finance, Fox Business, they're going to be one of the last ones to the party once the NASDAQ hits all-time highs during this COVID-19 pandemic. We're here to tell you that right now, that we're seeing that on the price chart for the NASDAQ. Weekly price chart looks real good. Monthly, we're starting off the month of May real good as well too. So we're still going to play the market movement in the NASDAQ with a move higher. Again, we're going to play this on the weekly time frame. And clearly 9,400 points is where the market is finding some restriction. So you would expect us to see some sellers, the market trapper, going to come in and try to offload some of his bags there. So once we hit that 9,400 price level in the NASDAQ, we got to be focused and see how much weakness play out, because if we see a lot of weakness, that's going to be the high right there. All right. And I would definitely like to see 9,000 hold support in the event that the trap does offload some of his bag there at 9,400 points. So we'll TP the market at 9,400 points, which is another 2% market move, which is very doable on a weekly perspective. Okay, but we're going to tap it out all the way up there around 9,800 points, which is also something that is doable too. Okay, so this is it. NASDAQ done. Next one we'll look at is going to be S&P 500. And here we are looking at the S&P 500 real quick. Like I said, we was looking for the market and S&P 500 move higher. We got that out. 4.22 at least, or about 5.5%. All right, so let's take that out too. Bag that. And again, this price chart looks pretty much the same as the NASDAQ. It's just not as strong. You guys can already tell we got some restriction coming in around 3,000 points. So we got to be cautious of how far the market trap is going to try to offload his product there at 3,000 points. Simple. But again, we're going to continue to play the market mover in the S&P 500 to move higher. We would like to see the trap hold 2,900 points there, but we'll hold 2,800 to give us a little bit of cushion in terms of when we do see weakness play out. Our TP is going to be at 3,000. About another 2% there. And we're going to bring it down just a tad though. All right. So this is S&P 500. The market still looks pretty well in that sense. Not as strong as the NASDAQ though, but it's strong. 3,000 is where we need to be cautious though. Right there around 3,000 points. Now the last one, the Dow. Okay. Now looking at the Dow, it doesn't look as strong as the NASDAQ and S&P 500. So you got to be a little bit more cautious on this particular forecast in the market. But we still close at the high of the bar, but not as strong as what the NASDAQ did. Okay. We're still well within our price target forecast. If you want to get out now, about 2.62%. So let's go ahead and grab that out in the market. All right, but we're still gonna play the market moving higher in price in the Dow. But again, 25,000 points is the next plausible area of restriction that we're getting in the bag. So still like another 2.5% market move in the Dow. Okay. So the expectation in the market literally is still to see a move higher in price. We're still going to play that out in these three indexes. The market is definitely showing us on a weekly perspective that these stocks are still indicating, showing us market strength, and that's how we're going to play it. Simple to see, simple to understand. That's what we're here for. So now all we need to do is just sit back and let the market trap do its business, and we'll follow right behind them. Questions, comments, let us know. Hey, make sure you maintain a profitability, and I'm out.